Hello and welcome to the Fintech Finance Virtual Arena. I'm your host, Doug Mackenzie, and on today's session, we're going to be looking at how technology is actually helping businesses become more resilient in a COVID world. Joining me today, I have Gwynne from Lloyds Bank. Gwynne, how are you doing here today?
Very well, Doug. Thank you. And it's really nice to be with you.
It's absolutely our pleasure to have you on because it's such an engaging topic because it's really changing every facet of the world. From every vertical, every industry is having to reevaluate their use of technology, and obviously you guys in the finance industry and the banking industry are helping that. Now, for our audience who might not be aware of you, Gwynne, could you tell us a bit more about your role at Lloyds, please?
Yeah, sure. So I've been with Lloyds for about 3 years, and I'm responsible for working capital solutions, and that includes the invoice, financing, factoring solutions that we offer to our clients, as well as traditional trade, more structured, complex trade, the ECA business, and the open account business.
Absolutely amazing. Well, you're right at the heart of it then, looking after these organizations and these businesses. So with that in mind then, would it be fair to say that in the wake of the pandemic's disruption, that resilience will actually be the key KPI, the KPI for many management suites?
Yeah, Doug, I think so. The last 18 months have been a period of huge uncertainty with a considerable amount of unanticipated disruption, to put it nicely. The real headline today is the fact that our clients are facing a series of concurrent stresses. It's not only the pandemic, but it's a myriad of supply chain pressure and inflationary headwinds, etc. And this is fundamentally testing their resilience. From a working capital perspective, supply chain disruption has really impacted business, increased costs, and promoted the need for new ways of working. As well as finding new suppliers to plug gaps and implement technology to increase supplier visibility. So I'd say we look at this disruption from two perspectives: our own financial operations and risk and resilience, of course, but also from the customer standpoint. And really our key role is to help our clients build resilience. The key thing to remember, which I always say, is that resilience goes both ways. Banks are more resilient if and only if their clients are resilient. To your point, yes, we see companies introducing new KPIs to determine resiliency, things like time to recovery, time to survive. Managers are asking themselves, how long can our company continue meeting demand of our clients if we experience a particular disruption? How long will it take us to recover from the disruption? Obviously, it's really important that, a company should always be able to survive longer than their recovery time, of course, but there's a real balance. The last thing that companies want to do is to avoid holding, a lot of idle inventory.
And I think that's going to be so critical is having that visibility of every part of a business going forward. It's enabling better and more informed decisions, and ultimately having a knock-on effect throughout the whole business. Now, to enable that, I'm interested in what technologies you guys at Lloyds are using to kind of navigate this heavily disrupted world.
Sure, yeah. And in terms of technology, there's really a new roadmap emerging. AI and automation certainly play a key role in resilience and risk mitigation. And maybe I'll share with you something that I just learned this morning. Lloyds is the winner of a recent award just launched, I think yesterday, outstanding use of technology in trade finance. So we're really pleased about that. And within our business, we look at three main categories of tools to help our clients. Obviously, the first one is risk mitigation and assessment tools. So tackling the issues of credit risk of their trading counterparties, working capital assessment tools to help determine the type of liquidity, the timing of liquidity into their business in the most efficient and cost-effective manner. And that's not only for our clients, but we're also looking at how do we best get liquidity into our clients' supply chains.
Yeah.
The second thing would be offering the right platforms for clients to do business with their buyers and suppliers. And these platforms have to be as simple as possible. A great example of what we're doing within the supply chain finance space is our recent partnership with Demica. We can now provide users with intuitive dashboards, access to key information, all the straight-through processing to automate that critical lake of their business. And we're also giving clients a platform of choice, which is particularly important for larger corporates that are multi-banked and really frustrated by the plethora of proprietary bank systems. And then finally, I would say, supply chain, the lens that we can put around supply chain and ESG, we've got a comprehensive approach to this, and looking at not only risk mitigation tools, which are really exciting, but getting that carbon overlay on top of a client's supply chain. But key is, I'd say, is that we pilot with customers in the room. They're at the center of everything that we do, and that's probably the driver behind our recent award.
Well, I've got to say, firstly, congratulations on the award. What an award to really bring to bear after all that work over the last 18 months. And the fact that you have the customer right at the heart of it, informing the decisions that you yourselves are making to help them make better decisions as well. It goes back to your first point of, a bank is better when your customers are better, and everything works together in tandem like that. Now, with that in mind, then obviously you've brought in how automation can and artificial intelligence can kind of streamline and make everything a lot more simple, which is for a lot of these organizations so important in this time period. But looking then also to adopting cloud platforms, then does that help when it comes to resilience for large scale organizations, especially in heavily regulated industries?
I'd say absolutely, but right. So I'd say, we live in a mobile, digitally connected world. There's no tolerance for downtime. There's demand for low cost, high performing solutions. And what we see is this fundamental shift in thinking around enterprise risk management. So, when a customer conducts a simple online transaction, there's so much system interdependency. If any one of them goes down, there could be impact to the client experience. So in my mind, cloud is really about reducing cost to customers, increasing agility, reducing risk. The cloud in itself doesn't guarantee resilience. And, it's important to review it just like any other tech domain, with resiliency requirements that have to be well-defined, assessed, measured, monitored. But to your point, it's really exciting. And what's most exciting is that cloud solutions can really help ensure continuous availability, that resilience and recovery that is really at an unprecedented level.
That's absolutely amazing, and it is so true, isn't it? The world has moved mobile, and the customer demands have reached that level too. It's no longer a kind of a want. It's a demand, it's an expectation, which obviously then applies pressure to you guys. It's almost like a thankless task at the end of the day, because as you said, it's 24/7. And I think banks obviously have to employ that role in everything, really. Now, one thing, we've obviously talked about the technology there, but I think one thing behind the technology is obviously the talent that is enabling the technology to kind of help focus, help bring better visibility to people. So I'm interested to see how, for instance, CTOs and CFOs, their role is going to change with this influx of technology. And do you think we're going to see collaboration between those two roles too?
Absolutely. And that's a really cool question, and one that I haven't been asked before. Obviously managing working capital is critical. Solutions that help our clients do that and manage those risks are key. Smaller companies can't afford the technologies like real-time tracking and monitoring, those predictive analytics that the larger corporations can deploy. So key is comparison tools, AI within bank solutions to help clients support their decision making. I think in addition to what we've launched over the last 18 months that we're talking about, we're piloting these tools, as I mentioned, with the clients in the room. And I guess what I see is for the foreseeable future, leaders are going to have to expect the inevitability of disruption. And it has big implications for the choices that companies are making in terms of technology investments. And that's where that joint CTO CFO decision making is really coming into play. The business costs of a disruption are so big. And at Lloyds, we're adapting to mitigate those for our clients. Tech plays such a big role in business, in our everyday life. And, the CTO, the good thing is I think the CTO is now, more of an integral member of the board, right? Designing plans for development and for growth in order to get businesses to where they need to be. And at the same time, the CTO is now more savvy, shall I say, when it comes to return on investment. Likewise, the CFO is more well-versed in terms of rapidly changing technology and what it can deliver. But key is really that both the CTO and the CFO are focused on how to get the right solutions and the innovations into the business that are going to support their growth.
It's an interesting evolution, isn't it? As the CTO is no longer in the basement with the IT crowd, it's suddenly everyone is having to actually come together and discuss these disruptions. Because I think one thing is fair to say about COVID is it was unique in the fact that it wasn't a financial crash that caused severe disruption, and the fact I think now we're going to start businesses are going to have to start anticipating that as well. Now, with that in mind, obviously, as we've talked about the technologies that have kind of been helping out in the past, but I'm interested to kind of put a future spin on it and look at how pivotal digital technologies will be to providing itself to these disruptions going forward, because we've got the bedrock, you've got the automation, you've got the cloud to be able to scale. Where do you see that going in the future?
So I think in the world of trade, it's so exciting. We're more focused on digital end-to-end than ever before. And it's really all about simplifying the client journey, but also about reducing the risks in the business. We see a lot happening in terms of digitization. We see the legal changes that are coming into the UK, probably second quarter of 2022. That's a game changer for the SME. And so I'd say it's not only a salve, it's a game changer. It's reducing pain, it's reducing friction, and really, really changing yesterday's standard processes.
Yeah. Now, that's an interesting point, having that kind of change to yesterday. It's not this kind of evolution, it's actually reevaluating everything before you can actually change everything. And we've kind of been talking about the technologies in the broad sense, very top down. I'm really interested, Gwynne, in kind of looking at what Lloyds are doing to enable these businesses to kind of go on and thrive. I know we've talked about how you keep these businesses, your customers, right at the heart, and you actually get them involved with these pilots. But what kind of technologies are you looking to do, and how are Lloyds enabling businesses to thrive in this time rather than just survive?
Great question. And I think, we can touch on supply chain visibility, right? It's absolutely critical. And some companies do this really well. They get into their not only tier one, their immediate suppliers, but down to tier 2, 3, 4, 5, the suppliers of their suppliers. Yeah. When it comes to supply chain visibility, on my personal agenda is really helping our SMCs. Gain that visibility, those early warnings of potential disruption within the chain. It's so important to ease the pain of business and mitigate the risks that they face on a daily basis. The other thing that gets me super excited is the ESG scoring, right? So to put that carbon overlay on top of a client's supply chain as they try to get to net zero. And I think here is where standard definitions are going to be an enabler. We work very closely with the ICC, with IFTA, with BAFT to help harmonize the definitions for clients. And then, there are plenty of players, plenty of fintechs in there that are helping us with carbon assessment, in the supply chain for our customers as they move to net zero, which in and of itself is a crucial form of resilience.
Yeah, and I think that's such a brilliant point. Is it's looking at ESG in a different lens rather than it's something that you just have to do. It's actually looking at the benefits that come about from looking at environmental, social, and governance in a better way. And as a bank like Lloyds, being able to facilitate that opportunity rather than hamstring it's just absolutely brilliant to hear. So I just got to say a massive thank you to you, Gwynne, for that. It sounds so exciting that the trade finance industry is moving in that direction. And Gwynne, I think we are coming to time, so I've also got to say a massive thank you to you anyway for your insights. It's absolutely fascinating, and also I want to say a massive thank you to our audience too. You can catch the rest of the series over at ffnews.com and of course YouTube, but especially LinkedIn, where you'll see me in the comments. So Gwynne, thank you so much. I hope you have a lovely rest of your week, and goodbye.
Thank you, Doug. Thank you so much. It's a pleasure.